Hello, long uptrend line swing trading strategy of large cap stocks. So we are going to pick 3 large cap stocks to analyze with our long uptrend line swing trading strategy that we use to swing trade stocks. So the first one we are going to analyze is BX. We have swing platform open, and we have BX here. Yesterday the price went down, and today is June 5, 2025. So it's good to, if you can, to do the chart analysis before the market opens. So by looking at the chart, we have maximum daily chart that we can see the chart from far, and we have the valley line, the support line at the valley of the mountain. You can see the mountain that we like to buy at. It came close to it and start going up, so it start creating the left upside wall of the mountain. That's why we put a red on our list. We mark a red there to keep an eye on it. So when we look close, you can see that the red bar is a pullback. That means the market closed yesterday at the price that is lower than the price the market opened in the morning, and the green bar is the market close in the evening at a price higher than the price in the morning when the market's open. So it pulled back, and when it start going up, let's say today is a green bar, could be a day to buy as well. But keep in mind that is a little bit further away from this line that we like to buy at, but it's still close to it. Buying it at the valley line doesn't mean to buy when it touch point with it, but when it pull back to it and start going up and start making a higher lows, like in this instance, when this low is higher than this one, is higher than there. So usually it's the red bar that I try to compare their base, but some green bar can be low as well, and when I'm tracing the line I can touch the green bar. I don't have problem. I don't make it precise, but it's showing higher lows. You can see the line is kind of oblique going forward compared to here when it's going downward. So but again, it could turn around and try to pull back again. It can happen, or it can just continue going up from there. So it's not about being precise, but buy it as low as possible and then sell it at a higher level when it reach a new high. So having that exit point, which is going to be a new high, because the watch list is a list of upward stocks. They do reach new highs periodically, so the exit point is going to be the next new high. The entry point is going to be the base of the mountain, around the base when they start making higher lows. So this is closer to the base than it is to the next new high. Does that make sense? So it will be a good place to buy if today is a green bar as well. But just keep in mind that it could turn around and come back down. I like to buy it when it touch base with the line and start going up, but it doesn't go all the way to it before it start going up. So they all behave differently. Just like here, it didn't touch base with it. It stay up somewhere there. So I like to compare what is going on to the past to see if there is a similarity that I can rely on to use as a rule. Therefore, I had to see the facts before I take action. I don't take action expecting the fact to happen. Does that make sense? So I take action after the fact. It will be at the position I wanted to buy before I will buy. It will reach a new high. I will see it before I will sell. Does that make sense? It's just a strategy. It's not the only strategy out there. It may not even be the most profitable strategy either, but it's just one good strategy that I like, that I'm trying to perfect. The second one we are going to analyze is CASY. So BS will be a good one to buy today, some share today if it is a green bar. But I'm not going to buy. I'm not buying stocks at the moment. I have a lot that I purchased that I'm waiting for them to, to reach where I want to sell them, So CASY, yesterday the price went up. That's why you have a green bar. You have a green highlighted price there. And we like to buy at this line. But so far, it pulled back to this line and start going up from there again. So there is a chance it may not go this low. It might just try to use this, or is just maybe making the left side of the mountain wall. It's not down here to pull back. But again, we do not want to buy that high with long option and century strategy. So the next one we are going to analyze is CAT, and that will be the last one in today's session. Okay, so CAT, we have multiple lines that we like to see. When it pull back to it, we can buy some, and it pull back to this one. It doesn't look like it's going to pull this low, so it's going to use this one as the value line. It pull back to it and start going up from there. At this point though, is quite far from it, but that has not reached the new high yet. Yesterday the price pulled back, so and it's still following this line here, creating that wall. So if today is a green bar, it could be a time to get some as well, assuming you are interested in getting it. But there is a chance that because it touch base with it and start going up from there, there is this line that even this one, it didn't touch base with this one at all, and there is this wall that so that will be, there is this wall, this support line that at some point it will start creating, and maybe this one will become that support line there. I'm not sure, but so buying some share at this point is an option as well. But that is just one example of how you can analyze stocks on your watch list if you are using long option and trading strategy to see if a stock is well positioned for you to buy, or if stocks you have in your portfolio reach the exit point you are targeting for you to sell. Thank you so much for watching. We thank you very much for watching our videos. We thank you very much for your time. We thank you very much for all your comments, and we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence. where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small. Even if that's $100 that you allocate per trade, that's fine. Just start small and take your time to create your watch list of stocks. And practice with that with a small, as much as you can afford to buy one share of a stock from your watch list, and then when you sell it you have a little profit in it. Just continue practicing to see if the stocks you have on your list work well with the strategy you are using. If you like the strategy, then you keep adjusting your watch list year after year until you get a good list of stocks that works well with the strategy you have, and customize the strategy to your liking to fit your risk tolerance as well, and your time availability. And once you have a good curated watch list and a customized a swing trading strategy, you just keep using your watch list and the strategy to just invest. So once you start small and you start making a little profit, then you know that you have a good list to work with and good strategy to work with. And to increase your profit, you just buy more share by investing more money. And yeah, that is the strategy that I tend to use. Thank you so much for your time. For more swing trading related video or stock investment related videos, will you please check the playlist in the description of the video. Thank you.